A blissful good morning to each and everyone who is just listening to this. Welcome to the another episode of Investment. So this is the fifth episode of Investments in which I'm going to talk about the investments related to gold. As you all know that gold is a precious metal which is famous worldwide. If I talk about the global scenario, if I talk about the scenarios of global market, then you see that gold is considered as the most precious metal from the times. Okay, so let's know about the actual value of gold. But before knowing the actual value of gold, let's dive into the history of gold. As you have seen, gold is also considered as a part of evolution of exchange. If you look back in times, then before the evolution of paper currency, there were the times of kings where the kings used to circulate their own currency, and up when times goes on, when the time passes by, gold comes within the scope. The first country, as a fact, the first country that discovered gold was California, and the another region that made international trade possible with the exchange of gold was Nubia. It is a state, it is a region in Africa. And apart from that, if I talk about the times of the kingdoms, the times of empires, then there were the kings who also circulate the tokens of gold, the coins of gold, that facilitates the functions of trading between the people, through which they can exchange the products, through which they can exchange the value, through which they can exchange each and every kind of possible material which was available in the kingdom of kings. Okay, the history of gold is too big. The gold is present, well, gold is present on this earth from millions of years, but it comes to notice from the last thousands of years. And after that, the another question is the supply of gold. What is the actual concept of supply of gold? Well, the supply of gold is limited. Yes, the supply of gold is finite. It means that there will be a time where the whole world will completely run out of gold. It means that it basically means that we don't have gold after a certain point of time, and all those people who are holding the gold right now will be the only people who will become so rare too, because the demand of gold is increasing, but the supply is so limited, the supply is so finite. It means that the miners who are mining the gold, miners are basically all those people who are producing the gold. Gold is not something which you can purchase, sorry, which you can manufacture from your own factory, which you can purchase from any kind of store, or gold is not something which you can make by sitting at your home, by building a website. It is not like that. Gold is a precious metal, that's why it requires mining, and miners do that. So the supply of gold actually depends upon the ratio of mining per year. It means that the stock of gold which is currently present in the earth is all about the work of miners. After that, returns of gold. Now returns of gold means that if I take you back in the last 80 years, you will definitely see that gold has yielded a return of more than 53,000%. Yes, it is true, it is true. Now if I talk about the returns of gold that gold yielded to us on a yearly basis, on per annum basis, then gold yields around 7 to 10% of return. Now many people thinks that, many people will also say that you are saying gold yields around 7 to 10% of return on a per annum basis, and you are saying in the last 80 years it has yielded a return of more than 53,000%. 53,000, not in 100, it's 53,000, 53,000%. You are saying that. Then let me be clear here. When I say 53,000%, it's not a fixed rate of return like your fixed deposits. The rates varies. If you are a person who understands the economics, if you are a person who knows about the history of our nation, then you will definitely see that there were the times of economic depression. There were the times of recessions in which people ran out of the resources, people ran out of the food. There were scarcity of all kind of resources which is directly and indirectly available to all kind of people at that time. And also people of the time was also not even to consume the food in sufficient quantity that is required by their body. So at that point of time, the demand of gold is circulating in a so good manner, because it was pre-founded that gold is something whose value gonna increase in the nearby future. The economists of that time pre-founded that notion. So with that particular pre-founded notion, many people start purchasing gold. Many people started like holding the gold in their homes, in their houses, in their stocks. But as I said earlier, the supply is limited. Still supply is limited, then supply is limited, and will supply is limited forever. That's why the demand was at the top, because people don't have anything with them at that point of time. They don't have enough food, they don't have enough resources, they don't have enough income, and for that they require funds to satisfy, to fulfill their basic needs. That's why they purchase gold. Then it is also a pre-founded notion that gold is an emergency fund. Many people say that gold is not an investment. Gold is not an investment. Gold is something which you can use in case of your emergency. It means that gold is an emergency fund. Gold is not an investment. Many people say that. But if you invest in gold, obviously it is investing. If you invest in gold by a pre-founded notion, by a perception of investing in gold is just for emergency fund, then you should go after other classes of assets which are highly liquid. Now what are the liquid investments? What are the liquid classes of assets? When I say liquid investment, it basically means any kind of investment which is available to you in your stocks, in your holdings, which is which can be converted easily into cash in a couple of days, in a couple of time. Anything which you can convert in cash, in fine cash, is a liquid investment. And gold is also a liquid investment. You can sell gold in the open market anytime. Either you have physical gold or either you have digital gold. You can sell it any point of time. Okay. And if I talk about the last 80 years, the price of gold, of 10 grams of gold, was available to us at the rate of 90 rupees. It means that 10 grams of gold can be achieved by us at that point of time with a worth of 80 rupees. Now, as of today, the rate of gold of 10 grams of gold, or you can say 1 tola of gold, is available to us at the rate of or at the worth of 48,700 approximately. Now you'll see that how valuable the gold is. Now each and every one of us, and still we all know that gold is a valuable asset, because gold is something that whose value increases over time, and definitely it will increase for sure. Now the question was that how 54,000% return? Even if you compound, then it is not that much possible to achieve that kind of return that you are saying. Well, I am not saying that gold always yields 7 to 10% of return. When I talk about the economic depression of the 1930s, 19 to 1932, if I talk about the bubble burst of the technology around 2002 2003 year, then you will see that the demand of gold was at the top. Still the demand is so at the high, but at that time the demand was literally so high. That's why the price fluctuates around 200 to 300% of return in just a couple of weeks. It means that gold yielded 500% of returns in a couple of months at the time of recessions. Because when people become pessimistic, when I say pessimistic, means negative, anything that change the psychology of people towards something that they think that it will definitely gonna lose the value. That scenario is known as the pessimistic situation. Okay. After that, classification of gold. Classification of gold. When I say classification of gold, gold is available to us in grams, as it is a metal, it is a physical thing. Then it is available to us in grams, in kgs. Okay. But another thing, that many people said that how one can identify the purity of gold, that the kind of product of that the kind of gold product we are going to acquire now or in the nearby future, how we can know the exact purity of gold. There comes the scope of carats. You will see definitely there on the jeweler shop that on a menu you will see 24 carats gold, 22 carats gold, 18 carats gold, 16 carat gold, 12 carats gold, 10 carat, so on, any kind of carat. Now what does it mean? Carat is nothing but just a unit that signifies the purity of gold, that determines the purity of gold. When I say the purest form of gold is of 24 karat gold, it means that if you are purchasing a product who is of 24 karat gold, it basically means that the product is made up of 99.9% of gold. If I say the 22 karat gold, 22 karat gold is basically means that 91.67% of that particular product is made up of gold, and the rest 8.33% out of 100% is made up of other metals. And when I say other metals, it simply means the metals like copper and silver. After that we have 18 carats of gold. Now what does it mean? 18 carat of gold means that if you purchase any product which is made up of 18 carat of gold, it signifies that that product is made up of 75% of gold, and the rest 25% out of 100% is made up of copper and silver. Now many people think that I have learned about the proportions and the weightages of gold. When it comes to the carat, I have not learned anything. I have done a simple calculation. You can too do this. You have to do a simple divide rule. If I have to calculate the proportion of gold, if I have to calculate about the weightage of gold in 18 karat of gold, now just look at the sentence. 18 karat of gold means out of 24 karat, why I say 24 karat, because it is about 99.9%, means around 100% pure gold. 18 karat of gold, it means that proportion of gold is 18 karat of gold, proportion of gold is 18 karat. Now whose proportion? What proportion? Proportion of total. As I said, 24 karat gold is the purest form of gold, 99.9% of gold. It means that the base figure is 24, and to calculate it means that 18 divided by 24 multiplied by 100 is equal to 75. Now this 75% is about the purity of gold. Again, if you have to calculate, like let's say 12 karat of gold, the only thing that you can now do is that 12 divided by 24 multiplied by 100 is equal to 50. It means that the kind of product that you are purchasing right now with a value of 20 karat of gold, it simplifies that though that product of yours is consist of 50% of gold and 50% of other metals like copper and silver. There are several other options, there are several other opinions, several other suggestions that people will definitely provide to you. Okay, now avoid the background noises please. Now the classification of gold, you can definitely calculate the weightage of gold by doing this simple calculation. You need not to learn about the weightage, the proportion of gold. You can figure it out by doing a simple divide rule I said. If you have to calculate the proportion of 20 karat of gold, then you can do 20 divided by 24 multiply by 100. Whatever percentage you will get, that is the percentage of gold which is available to you at your product, and the rest percentage is of other metals, copper and silver. If you need pure gold, you should go after 24 karat. If you need less, then you should go after 22 karat. And these classification is also like if someone need jewelry, if someone need any kind of earring, any kind of you can say woman material like nose pin, then they definitely go after the 18 karat gold. Okay, now other thing that is now FAQ, frequently asked question. If I talk about the frequently asked question, facts, then it is like is stock market related to gold market? How gold market and stock market are related to each other? Well, they are definitely related to each other, but in a opposite manner. You will definitely see when stock market started to fall, when stock market has fall in the past, you will see that the prices of gold has raised so much. The prices of gold has rises. Now why actually this happens? As I said, everything you need to clear in your mind in a conceptual manner, in a logical manner, because anything that we learn on a basis of bookish language, on a basis of anything or from someone else, is not gonna worth. The only thing that you need to do to enhance your learning, to enhance your knowledge, is to understand the logic behind each and every possible thing. Because if you have conceptual clarity about something, you're definitely gonna rock. Your knowledge definitely gonna rock in each and everything you do or you will do. So the logic behind the opposition of stock market and gold market is that when people become pessimistic about the market, it simplify means that when I say pessimistic, I had discussed earlier, pessimistic is just like when a negative news arises in the market, that this company is going to lose this, the negative news like the management of XYZ company is going to cut down its labor, going to cut down its production, the cost of a company XYZ company rises beyond its revenues. It means that it is a negative news. And when a news like this arises in the market, then people usually do one thing: they become more secure about their future. They start thinking about their future, that what if the value of their holdings that they have holded in the stock market will lose. What if they lose the what if they lose their value? What will happen at that time? So they start purchasing gold. As I said earlier, it was a pre-founded notion by the economists of that depression time, is that gold is an emergency fund. No doubt, you can, everything is an emergency fund. Like either you are earning, if you are an employee, if you are earning a salary of 50,000 rupees, 1 lakh rupees per month, it is also an emergency fund. Why you are earning? Why you are earning? You are just earning to satisfy your needs, to fulfill your requirements, to fulfill your needs, and to save or to invest in case of emergency. So you also can invest in any kind of highly liquid investment which can be converted into cash at any point of time. You can invest in highly gradable bonds, which is suggested by the credit rating agencies CRISIL Limited. And I will discuss concepts of CRISIL, the credit rating agencies, in the upcoming videos. And after that, the people become optimistic about the gold. When they become pessimistic about the stock market, they start being optimistic about the market of gold, and they start purchasing gold. And when they start purchasing gold, as I said, the supply is limited, and to control that, the price of gold start increasing start to increase. So this is something why gold market and stock market goes opposite. And this is not only about the India, it is about the world. In every country, in every nation, you will see this kind of notion. Whenever the stock exchange goes down, the value and the demand of gold goes up. You can see it anywhere. Now you can see how valuable gold is. If I talk about the commercial banks of the nation, then you definitely see that the commercial bank need to deposit some proportion of their securities in terms of cash, in terms of gold, in terms of their PSUs, in terms of their reserves with the Central Bank of India. And here the concept of statutory liquidity ratio comes within. The current SLR rate is 18%, I think 18%. Okay, it means that all banks need to deposit 18% proportion of their reserves, their gold, their cash in with the central banks. Okay, now you can see the how valuable gold is, because many people, many economists, many businessmen, many investors, many entrepreneurs believes in the concept of gold, that over time its value definitely gonna increase. You should invest in gold. Okay, after that, physical gold or digital gold? Well, to be honest, this is not a question anymore, this is a debate now. People debates on this often. That physical gold is better than digital gold, some says digital gold is better than physical gold. Well, both have their pros, both have their cons. Risk is in both, risk is in everything. In each and every video of mine I said everything at every time that risk is in everything. Life is in risk too. What if you have a fond of wearing jewelries, and if you purchase physical gold, and you are roaming here and there, and what if someone put a knife on your neck and say to you that just lend your gold to me, otherwise I'll kill you? You will definitely do that, right? Risk involved there. And what if you purchase the digital gold? Well, you're not gonna lose your value until and unless that company commits fraud through which you have initiated your gold investment. Okay, but the chances of that type of fraud is so minimal. Really, it's so minimal. And many people think that gold is in physical form is the purest, and gold is in digital form is the purest. Opinion varies. People have their own thinking process, people have their own perceptions. They can think whatever they want. But if you are a person who loves to update yourself in terms of technology, in terms of the era, in terms of the time period, in terms of the modernization, then you should definitely go after the digital gold. If you have a fond of wearing jewelries, purchase the physical gold. That will suit you more than the digital gold. But if you don't have that much fond of wearing the gold jewelries, then you should go after the digital gold, because value is same. Value is same. It means that if you purchase 10 grams of gold, or you can say 1 tola of gold in the open market in the physical form, you have to pay 48,000. Even if you purchase the digital gold, you can do this with the same valuation. The 10 grams of gold is also available to that platform at the worth of 48,000. Value is same, approximately same. Well, over time, gold involves taxation. LTCG, STCG, short term capital gains, long term capital gains tax. I will discuss the concept of taxation further, but in this video it's not the topic. So you can invest in gold, you can invest. Why I personally recommend to go after the digital gold is that you can purchase gold with a worth of 100 rupees. If you go to the jeweler shop, and you say to that particular jeweler who is just sitting here, if you said to that individual that I am here at your shop to purchase 100 rupees of gold, he will definitely gonna insult you, that you're purchasing 100 rupees of gold. Well, one rupees matters. Then I'm talking about the 100 rupees. Even 1 rupees matters. 1 rupees has its own value. Okay, but if you go after the digital platform, you can purchase gold of 100 rupees there, and the capital appreciation of your gold will definitely going to increase in the nearby future. So this video is all about the gold investment. This is the last second episode of investment, because I'll make a last episode of investment as the episode 6, in which I'm going to put my views that what kind of asset class you should invest your money in, and what kind of a person, what kind of an individual on the basis of their age group should invest. Either they should invest in FIs, fixed income instruments, or equity estates, or the gold, or they should make a portfolio mix up of all these of assets. This is the second last episode. After this I'll make a last episode on the investment, then I'll going to make a playlist of that, and after that I'll start basics to stock market, and basics to cryptocurrencies, basics to investments, basics to trade. Okay, so this video is all about the investment of gold. Hope you like it. In the next video I'll put my personal opinions related to all kind of assets on which you should invest or you should put your money in. So all about today. Enjoy, stay safe, stay secure. Thank you.